We have it on the talk on resolving cash flow issue for exporters with TREDS and ITFS solutions. I would request Shri Ketan Gaikwad, MD and CEO, Receivable Exchange of India Limited, RXIL, to please join us on the dais. I would also request Shri Ravi Pandit, Chief Manager, IFSC Limited, to please join us on the dais. I request you all to please present a very warm welcome to our next round speakers. I request Dr. K.N. Raghavan to please present his opening remark for the session. I request Ms. Meghna Nair to please also join us on the stage.
Good afternoon, friends. As we come to the last session of the day, we have a very important topic, which has become more relevant given the situation brought out by the imposition of additional tariff, or rather new tariff by USA. The platform of TREDS was launched by Government of India some years back, and it has been working very well. And it is a system which helps the vendors to get their bills discounted, and the buyers also are benefited because they have arrangement with the bank which gives them some extra time to make the payments. In fact, during these difficult times, we had been making requests that the buyers be given a longer time. I think it is 90 days, that it be increased to 180 days, and that the individual limits kept by the banks with the buyers be increased. Of course, the vendors don't have limits, it's unlimited. So we had, I remember this because I had actually made these requests before the Secretary DFS and the Joint Secretary in DFS and also the Indian Bank Association when the topic of what should be the contents of the package for tiding over the difficulties caused by the imposition of US tariff came up. So this is a system which is rapidly gaining acceptance and system which is being used more and more. And I am sure that the discussions, the presentation and the discussion that follow will be of great and immense use to the seafood exporters community. Thank you very much, and without further ado, I will request Mr. Ketan Gaikwad to take over.
Thank you, sir. Thank you for making the kind introduction. It's a very relevant topic and very relevant in the case of today's scenario, which is in case of where the exporters are facing a problems on account of the US tariff issues. And so what we are looking at is trying to tell you what is TREDS all about. And if you look at the TREDS system actually started somewhere in 2016. Now when you are in 2025, it's really grown. It's really grown in the sense, and it's very important for you to see how you can utilize it to your maximum benefit. So when the idea about this exhibition came in, and we were quite thrilled about it that, look, this is the right time for us to go and talk to the exporters and what TREDS is all about, because TREDS actually can solve the problem to a certain extent. So today I'm going to talk about TREDS and ITFS, International Trade Finance System, which is there in the GIFT City, and how it's going to help the cash flow, how it's going to resolve the cash flow issues of the exporters, especially the MSMEs who are supplying to the buyers, who are in turn doing the exports to the country outside. So TREDS is a very digital platform, very digital in the sense most of you will be using it. It's completely end-to-end digital payment, and it's a completely a digital infrastructure which is there. So it's a unified platform where you have the buyers, sellers and the financiers. At the same time, this platform completely works on the modality that the buyers is coming on the platform, and the buyer's credit rating is important for the bankers to assess how much limits can be given over there. So I'll address the issues about the 90 days to 180 days also, how that can be resolved. So as I told you, that there are three participants of the platform. One is the buyer, one is the seller, and one is the financier. Now the buyers can be the seafood exporters or the seafood people who actually buy the seafood from the seafood aqua farmers. So these are the buyers. And the financiers are a lot of banks, so there are almost 70 financial institutions on the TREDS platform, and they're seeing increasing growth on how the TREDS is benefited. In fact, IIM Bangalore has come out with a study on how the TREDS platform has actually benefited the MSME suppliers. So what happens is, the buyers have to get enrolled, the suppliers has to get enrolled, and the financiers are getting enrolled on the platform. So right now, if you ask me, We have almost 2,500 buyers on the platform, almost 50,000 suppliers, and almost 70 financiers on the platform. So how it works, I'll show it to you. So let's say your MSME vendor or the aqua farmer actually supplies the goods to the buyer, which is the exporter. He uploads the, he supplies the goods and uploads the invoices on the TEDS platform. Now, once the invoices are uploaded, then the invoices need to be accepted by the buyer. And once the invoices are accepted, based on the credit rating of the buyer, based on the credit standing of the buyer, the bank assigns the limits to the buyer. Now, these are limits which are over and above your facilities which are there on the platform, which you individually enjoy. So these, you can say, these are all unsecured limits which are there. So once the financier, once the counterparty approval is there, once the invoices are uploaded by you, and once the invoices are accepted by your buyer, or if you are the buyer, once you accept it, then the financier starts looking at the buyer, and then does the financing of gives the quote. It bids for it. So there is a competitive bidding which happens, and once the bidding is done, then there is an acceptance which is required from either the MSME as well as the buyer. So it depends on who's bearing that cost. Depending on who's bearing the cost, there is an acceptance which is there. And once the acceptance is done, there is an obligation which is created between the buyer and the financier, and the financier needs to pay, the buyer needs to pay on that particular due date. And once this is all done, then the payment happens to the MSME supplier the next day. Immediately the next day, the payment goes to the supplier. And on the due date, the payment happens from the buyer to the financier. This is how it works. So we have seen great success over here, and actually the platform has grown during the times of COVID. That was the time when the massive disruption. We have seen particularly in the times of the very classic example which I always quote to people is Goa government. Goa government, actually the entire economy is reliant on the tourism, and they did not have the money during the COVID times. They were running short of cash. So they came on the platform. And during the COVID times, they started paying out the suppliers. After 180 days, they paid the money to the banks, right? And during that period, the MSME suppliers got the payment. They started their work on the roads, which is the infrastructure. They built the infrastructure. They almost doubled the infrastructure during the COVID times. And that's how it works. So that's why it's important that, look, I was talking to Mr. The president of the association, and I was telling them that, look, this is the time when most of the exporters, buyers should come on the platform. And very clearly he told us that, look, we cannot not make the payment to the aqua farmers. If we don't do that, if we stop making payments to them, there will be a social unrest, right? And this is where it helps over here. That you come, rather than if you have 90 days term period, you can enter into an agreement with the supplier. There's a credit period extension which is there. So you enter into a credit extension over there. That is right from the day one. It's not after 90 days you got to go for an extension. Right from day one, you go for 180 days credit period, and then your bank actually makes the payment for you. And on the 180th day, you have to make the payment. So at least you got a cash flow scenario which is deferred by 180 days. Your payments are deferred by 180 days. And then there is another solution which we have, which we say that, now today it's very heartening that, 102 exporters have been enlisted by Europe. It must be more also, that, they have been qualified to export to European Union, right? So the exporters can actually come on the platform, and then they can do the export financing, which we'll talk about it later on. So this is how it works. And what are the benefits which are there for the sellers, buyers, and the financiers? First of all, MSME sellers, it is the non-recourse payment. So it's not a facility which is there for the MSMEs. It's the MSME actually getting the payment. So this is the way that, you can make the payment to the MSMEs. Quicker payments within almost 24 hours. Lower cost of funding. Funding is very cheap. It's not parallel, or it's not something which is very similar to the bank funding, because this is without recourse. At the same time, it actually assesses the credit grade of the buyer and gives the funding over there. As far as the buyer is concerned, they can actually keep the supply chain live, and actually we have seen it that it helps in enabling the relationships much better if the people are there on the TEDS platform. Then, we have seen that procurement terms. We have seen that when the buyers come on the platform and they make payment to the suppliers, it's actually enhancing the procurement terms. At any supply chain, the weakest link, the supply chain is as strong as the weakest link on the platform, on your supply chain, right? The weakest link is the MSME, which makes the supplies to you. And tomorrow there is a small break over there, then you can know that the entire supply chain comes tumbling down. So what we have seen during COVID time, and actually is a testimony of the fact that this platform actually helps in sustaining the MSMEs over there. Financiers is priority sector lending. That's why they're very interested. So just to tell you how much we have done, I'll come back to that. How much we have done. In fact, last year, the TReDS platform together have done 2,40,000 crores of worth of financing. 2,40,000 crores. It's not something it's $30 billion has been financed through TReDS platform. Our platform itself, we did something like 80,000 crores. 80,000 crores has been financed by us. So, and the government is very keen. In fact, very heartening to know that, you mentioned it to the DFS, and the DFS, they are very happy about the way the TReDS is progressing. They are very keen that how can we get more buyers, how can we get more people on the platform and make the payment to the suppliers. In fact, they are very much aware of what is TReDS all about. And in fact, they are saying that how can more and more buyers come on the platform. So in fact, you should make a representation that, how can we use TReDS effectively. At the same time, now let's say that, at 0 day, you have made the payment to the supplier, the aqua farmer. Now you got a 180-day credit period. Now during that 180-day credit period, you find an alternative buyer because there is a disruption. Now you found an alternative buyer, now you start supplying to them. But you will not supply to any other alternative buyer, right, when it's overseas. You will actually supply to the credit-worthy buyers on the other side. That's normally the case, right? And that's where we say that, the GIFT City platform helps over there. That is where the export financing will happen. Again, this factoring, which is without recourse. Now GIFT City platform, this is where GIFT City platform helps. Again, it's the same thing. We are focusing more on factoring of receivables for MSMEs or the smaller exporters over there. And look, when you look at factoring, factoring has not grown much in India. And when we made a representation, we actually have been talking to the DFS secretary on what factoring is all about and what we need to do. Because if you look at countries like Europe collectively does $12 trillion worth of financing. Almost, no, sorry, not 12 trillion, it's 2 trillion. $2 trillion worth of financing is happening in Europe every year through factoring. It's almost 12% of the GDP. So what we are saying is, factoring needs to be promoted over there. What does the factoring do? You have an exporter, you have an importer, which is a cross-currency, which is a cross-country over there. And there's a credit cover which is given. Credit cover is either given by an insurance company or it is given by a factoring agent over there, which is a factory. So basically, this is two factoring thing. So the exporter comes across to the platform and then it tells them that, look, I have got an order from the importer on the other side. Do you have funds on them? Do you have the limits on them? You guys, I think everyone would be knowing what factoring is all about, right? So you will come to the financier first and say whether we can get limits on the factor where the company abroad. Then you enter into a sales purchase contract with the importer on the other side. You provide the export documents. So basically what we are saying is all the authorized dealer work will happen through your authorized dealer, but the financing will happen over there. Now what it does is the exporter documents, we get it. The normal route is that the exporter's bank, that is your bank, will actually send the documents to the importer bank. In the same time, the credit limit will be given by the import factoring company over there. And then when we get the buyer's approval that yes, the limits are available on this particular buyer, then the bidding happens. Basically, the financing happens on the platform. Again, the financier will be on the Indian side, who will actually take a risk on the importer on the other side. And that's how the financing will happen. And then the payment happens to the exporter. So this is what we are saying, that when you have already financed the supplier, or rather when you have done the financing to the supplier in the 180 days period, within that 180 days period, come with your export documents, get it factored on the platform. Once you receive the proceeds immediately or whatever it is, you can go and liquidate your outstanding. So this is how we say that, this can be an easy solution. This can be a very good solution. And this is what we are saying that, this is something which we want to do. So on the due date, the payment comes from the importer to the financier directly through the credit cover. It's completely a digital platform. So completely in the platform, we do the vessel tracking, we do the sales ledger analysis, we do the e-bill of lading verification, we do the credit information, KYC checks and all that. So a lot of corporates are using that now. See, look, in India, what is happening is the largest corporates go and do their factoring outside the country. In Singapore, London, they do the factoring company. The likes of the largest corporates in India, they go and do the factoring in London, Singapore and all that. But the medium terms of corporates actually are the corporates which do not have the access to the funds can go to GIFT City. Now, GIFT City is basically for that. And the government's focus is that more and more your focus should be on MSMEs, your focus should be smaller exporters. And why it is interesting, because it's something like a IFC, which is it's in the international, in terms it's international financial center, which is there in your backyard. And that's why we can do the financing for these exporters over there. And why it is important, is growingly important, and why you should be knowing about it, that when India is marching towards $5 trillion economy, government is very clear that 2 trillion has to come from the exports, and 2 trillion from 2 trillion, 1 trillion has to come from merchandise, and 1 trillion from the soft exports, services exports. And that's where the government is focusing on this GIFT City initiative. So again, to just summarize the things over there, what we are saying is, when the seafood exporter actually gives the documents to the ITFS platform for the pre-approved buyers, so basically there needs to be a mechanism where pre-approved buyers need to come on the platform. So when you have the pre-approved buyers which are coming on the platform, then we can do the factoring. The payments can happen through the factoring mechanism. And at the same time, the TREDS platform can help you, enable you to make the payments to your smaller aqua farmers, either logistics, aqua farmers or packaging suppliers, at the same time do the financing from the TREDS platform based on your credit rating. This is what it is. This is what it's all about. What is RXL, the company from where I come from? Our company is promoted by SIDBI, Small Industrial Development Bank of India, State Bank of India, ICICI Bank and National Stock Exchange, and Yes Bank altogether. And the motive is that when we started it 7 years back, it was a small firm. Now we have grown into some 250 odd people doing the financing. And this is something which the government wants us to do. So this was all in a nutshell, this was all about TREDS and ITFS platform. If there are any questions, I can take the questions.
So good evening, my name is Pawan Kumar. I know we met each other on a virtual call, so I'm the first one asking you questions. Sir, there are a couple of things, I don't say loose ends, but let me start by saying this platform is an excellent platform. We have used it. We've been using it for quite some time. You have an excellent team also. At least the team which is assigned to me has been doing a great job. There's no doubt about it. But there are two things which I thought I'll flag them. First thing is, let us say I have taken a limit with RXI on the TREDS platform, and I got limit with, let us say, 2 or 3 bankers. Hypothetically, I'll say State Bank, Union Bank, and some other HDFC or something. For the first time when I use it, yes, all the 3 banks compete. They give me a very good deal. It is like something which is beyond my imagination also. There were days when I got this thing at 8.4% also. It was very good. So once let us say I got a limit of about 5 crores with each of them, I utilize them in a month's time. So it comes up for payment after 90 days. I make the payment. I clear one payment. Other 2 banks are still not, it's not open for me. But when I get a bid from this banker, when I again want to utilize, when I get a bid from him, it starts at 10.5%. So where is 8.5% the first time when I get onto the platform, where I have 3 bankers who are competing, which is nice. That is almost like a honeymoon period. Once that honeymoon period is over, I end up paying 10.5%. So how do we mitigate this?
So sir, this is completely a factor of a marketplace. So marketplace where the banks compete with each other to give the rate. So honestly, in fact, I would say there is experience is totally different. A lot of corporates, when they start utilizing this facility, a lot of exporters, a lot of buyers, when they start utilizing this facility, over a period of time, they have seen the rate of interest going down. So it is all a factor of credit rating. It's all a factor of the corporate scenario or what is happening over there. So that is what it is. It's just a blip. I don't think, because we have seen, I can rest assured and I can guarantee you that, this is just a blip. But otherwise, what we have seen alternatively is that when the corporates start using the platform, the rates of interest go down.
That is only when you have competition with 2 banks. it goes down. What if I have limit only with one bank, the other bank limit is exhausted, it is yet to be opened. So that is when.
So in such a case, what we need to do is, the bank or the platform needs to work very hard to get limits from other bankers also.
I don't need additional limits. I stick myself to the existing limit. But still, what happens when I get a bid for the first time, it is pretty high. So I think probably
I'll tell you what happens. It is a classic scenario of bidding mechanism or whatever it is. When there is no bidder, there is no counter bidder. So the first bank which bids for it, we always bids for a higher rate. If there is a counter bid, to counter that bid, there is a counter bidding mechanism which is happening. So when the counter bidding mechanism is not there, then you always end up saying that, boss, I got that rate. So sometimes they say there is no counter bidding. So there are a lot of times, major banks also, when there is no counter bidding, they end up getting higher rate.
So don't you think there should be a rider there? Let us say if the last time they've given me at 8.5%, let us say a fancy rate, your next this thing or your highest bid should not be more than 1% or 0.75% or whatever it is. Otherwise, it can go on and on.
It's honestly, it's a marketplace. So we don't see, at the most what happens is, that sometimes we always end up saying that whether there is a counter bid or not. If there is no counter bid, it's like a marketplace. If there is no competition for you, then you will always take the higher rate. So it's a marketplace actually. So it's a competition over there. So what the platforms have to do is, they have to get more and more bankers added for you. So in such a case that when first limit get utilized and the first limit gets vacant and the other two limits are not utilized, or rather they are fully blocked, that means only one bidder can go and bid for your transactions. So that time they take the advantage.
Yeah, that's exactly what I'm saying.
Yeah.
Sir, my name is Rajashri Banerjee. I'm the president of the Seafood Exporters Association in the West Bengal region. My question is, suppose I have a bill discounting limit with Bank A, not through this platform, independent bill discounting limit, export bill, say SBI, okay, for the sake of hypothesis. Now, what you explained is once I register myself on this platform, then the platform will induce other banks, say ICICI, HDFC, Yes Bank, to issue further additional limits to me,
Yes.
through which I can discount my export bills.
Correct.
And those limits, after assessing my credentials, are actually without recourse. It's an unsecured limit.
To the buyer, they are with recourse.
To the buyer, it's with recourse.
Yeah, buyer, because at the end of the day, the financing is happening to the MSME.
Correct.
The funding is going to the MSME, but on the due date, you have to pay.
The liquidation has to be from the buyer's end. So I'm doing exports. I'm the exporter.
Oh, you're talking on the export side?
Yeah, I'm talking about the export side. I have an export bill discounting limit with Bank A, say SBI. Then once I come to the platform, you were saying that, say, Bank B, Bank C, and Bank D actually issues me further limits through the platform. Am I right?
I'll tell you. In the case of the exporter, it's different. In the case of the exporter, what happens is, there is a pre-approved buyer. Let's say you're selling it to Walmart.
Okay.
Now Walmart, what happens now when you're now doing a normal bill discounting, your limits are blocked. Your limits are blocked by taking security, collateral, everything, right? You're taking a pre-shipment finance or a post-shipment finance. Now this particular limit is without recourse to you. That means, but you will have the recourse to the extent of performance. Let's say you're emitting you've done exports for $10 million. Now you got a $10 million limit on this side. Now you're taking a pre-shipment credit. In a normal scenario, what will you do? You will go to your bank, get it discounted for $10 million, and you go and liquidate a pre-shipment. And on the due date, you will wait for the payment to come in. In case the payment does not come in from the other side, your bank will go and debit your account.
Correct.
Because it's with recourse to. In this case, what happens is, we take limits on the importer on the other side. So we'll take the limits on the Walmart, whichever companies you are supplying to, right? Now there will be a fee for that. There will be some third party factoring company will say, I know this Walmart, I can take a risk on them, but this will be my fee. Now you have to take the call. Now you will take the call. Let's say you've taken the factoring facility over there, no performance issues, nothing. So what will happen is, you've taken the pre-shipment finance for $10 million. Now you got the export bill. Now what will happen is you take the export bill, you come to the bank, you come to the platform, we do the financing. We don't do it. Based on the credit standing of the importer, buyer on the other side, the factoring company will say, okay, these limits are okay to go ahead.
Sir, but the factoring company can do it directly. We are getting mails and offers from factoring companies offering this same service
can do it.
directly.
Yeah.
So what is the value addition by coming to the platform?
Either you can do it through the platform, you can do it directly also.
With the factoring company?
Yeah.
Okay.
Yeah. So what we are saying is, look, you don't have to discuss with them. We can get the facility directly with you. This is called a two-factor model. So that means there will be, let's say on the other side, there's a Wells Fargo on the other side, but he'll say, okay, I'll give the credit protection, but I will not give the financing. Now looking, let's say ICICI Bank on this side, ICICI Bank will say that I know Wells Fargo, I can do the financing. So now ICICI Bank is taking call not on importer financing, import on the other side, it is taking a call on Wells Fargo.
Okay.
On the due date, let's say on the due date, this importer overseas collapses. There is no payment, there is a default which happens. Now he will have to pay.
Wells Fargo is the credit guarantor for that, right?
He will have to pay. Now in such a case, on the first instance when you come to the platform and you've done the factoring, right? In the such case, what will happen is your fund flow will be that the factoring company or whichever company which has factored it, it will come to the factoring platform or whatever it is, and it will go to the authorized dealer, your authorized dealer to liquidate your pre-shipment credit. So now assuming you have a $10 million limit which has become free now. So you don't have to wait till the 90th day or 120th day till the buyer pays you.
Right.
It's a without recourse. On the 90th day or 120th day when the buyer does not have the funds or does not remit or there is a delay, you are not held at risk. So now you can go ahead and do your other financing. You are out of the hook now.
So suppose we ship something on LC at 90 days site. Okay. So what essentially you are saying that instead of or in addition to going to my normal bank and using their normal export bill discounting facility, the factoring mechanism can be used by which once the buyer is approved by the factoring company or the platform, thereafter in case if the money does not come on the 90th day, they don't have recourse to me, they will have recourse to the credit guarantor of the importer.
Correct.
Right.
Correct. And when you see the LC mechanism also, LC mechanism, I have been a trade finance professional for the last 30 years. LC mechanism is very tedious because till the time your documents are accepted by the bank on the other side, you are on the hook.
Yes.
Then there will be some discrepancy which will come in.
Yeah.
Now the discrepancy, that guy, if he's there are many times it happens, commodity risk is always there. That guy, if he wants to play truant, he'll say, unless you give me the discounting, I will not accept it.
Yeah. Happy
Unless you do the discount to me, if your $100 bill is there and say $10 discount, you give it to me.
Yeah. Sir, what is the turnaround time for this?
See, it all depends. So basically, the moment I have the business head over there for the ITFS, he can tell you. In fact, he works with, and I'll tell you why it is interesting to, and I'll just tell you, I'll just take one step further. Why it is interesting for the you want to come here?
No.
Why it is important that you should come, because a lot of the financing companies are interested in doing the working capital financing for India, unlike the traditional bankers which are interested, because they are saying, look, whatever development is happening, we are very much keen, and we are very much keen that we can do the working capital because the underlying invoices are there, underlying financing is happening. So we are very keen on doing the financing, working capital financing, and that mechanism is actually happening through ITFS platform. On the turnaround time?
So generally time is between 30 to 60 days, because just like in India, we have a facility that each entity files their balance sheets with ROCs. Geographies across, we don't have facilities like this. So we have to pull a lot of reports and financials from their database. So time investment goes in studying their balance sheet and setting a limit there. So it's a 30 days to 60 days process, depend upon the quality of buyer. Suppose it's a large buyer, which is a very known buyer. So my financiers have taken a pre-approved limit on them, then it's a 1 week process. And to again answer your first question that factoring companies are sending mails to you, what is the benefit of coming to platform? The biggest benefit is that we are consolidating the capacities. So we are working with say 10 financiers, which are outside India. And more financiers seeing the growth story of India wants to invest here. There may be some of your buyers who are working with some special set of financiers. So you get a pre-approved limits there. Then the work become pretty simple. You have to just connect the dots.
Or is it a process which the platform facilitates? So suppose, for example, we decide to sell to a very large Chinese company, okay? Does the Chinese company have to give their consent to be registered on this platform? Or they don't have to register?
They
right?
don't have to register, but they have to give the acceptance of the NOA. Correct? Amit?
Thread. Again, sir, they don't come on our platform. That is completely opaque. But we send a request to them that we are making payment to you here in India in your AD account. On due date, you send payment to our financer. That's a one-time agreement to be done with them, sir. A one-pager agreement or a notice of assignment that once you receive goods in proper shipment, then make the payment in India. So since those buyers don't know us, we take this route that we send a request to you, we make a draft, and then you further send it to the corresponding buyer.
But this is, as you said, this is available for domestic transactions also, right?
Domestic transaction is the Stretch
The
platform.
Stretch platform, yeah.
So you need to make the payment to the aqua farmers.
So in that situation, whether it is aqua exports or some other exports or some other transaction for that matter, I'm actually the buyer in that case, and I finance the invoice which is raised by my back-end vendor through this process, right? Yeah, okay.
At competitive rates.
Thank you very much. I guess we did not had a lot of people by the end of the day today, but I guess the most of the information was shared in the last three sessions. Thank you very much for giving us such great insight. I would now request Mr. Pavan Kumar, President SEAI. I would request sir to please present the memento and vote of thanks to our esteemed dignitaries. I request you all to please have a huge round of applause. So please come. So please join us. Please join us. Yeah, I would request this team to join him for the group picture as well. Please come on stage.